Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long trade here on crude oil and looking to fade this range low, assuming that, well, guess what? I don't believe you sellers, right? We have a massive run higher here this morning, all the way since about 4 o'clock is when it really started kicking off. And that huge bullish swing higher really didn't take much of a break until right now. So this range that we're forming inside here, very obvious little range, very nice and easy in terms of finding it. I'm looking to essentially go with the buyers. A range does tell us that we want to buy low and we want to sell high. That's just kind of common sense. But in this case, because of the bull bias behind the range, I want to be looking to buy low much more than I am looking to sell high. The only selling that I really want to do at the highs in this type of environment is take my profit targets. So the movement up that we're getting right now, because of this stronger break higher that we had right here, generally speaking, this is usually going to be a low trap and then a turn right back up towards the highs. So as long as we can close above our entry point here at 92, we can quickly lock our stop in nice and tight. Now, in terms of the upside objectives, the main objective is going to be getting back to the range highs. Very common area to look to take some profit off the table. And I don't want to go directly on that level, so we'll go one tick ahead of it. But in terms of the final objective, you'll notice I'm only taking 2 there. I'm going to be looking for a slightly larger target just to push the market above these range highs, about the same distance that we had this initial spike here. So we drove this spike higher. I want to see about an equal move to that right around towards the highs. So in terms of the upward momentum, I'm looking to take a final target off at around 25. 26 is arguably the level, so I'm going to go ahead of it down to about 23 should be okay. So you can see the stop is locked in very, very tight. It's a 2-tick stop because this is exactly what we wanted to see. I don't want to see this market come back. I don't want to see it even think about coming back. I want it to go up now. If it's not going to go up now, I'm not interested. So the buy at 92, stop is at 90, a 2-tick stop. Looking for the first target at 51.11, and then the final target, a run through equaling this breakout move earlier in the day. It should get us up to about 23 to 30 in that area. So I'll be a little bit conservative, and I will take my target at 23. So give it a little bit of time here, see if we can get that drive higher up to 11. Buyers pushing back up here, 1 tick away from the target. Came down, the sellers tried taking it lower, but they fell apart, and the buyers quickly took right back over again. So there we go. We got the first target filled. Now, because the stop is so small in this case, I'm just going to leave the stop where it is at -2. Yeah, you're leaving 2 ticks of risk on the table, but we use the 2-tick stop essentially for, a 20-tick move. So, a 20 to 1 or a 10 to 1 is pretty good in terms of risk reward. So leaving a -2, that should be okay until we get a little more information. I want to see what this candle does. If we're able to close above this range, especially if we're able to close above some of these highs, that would be really nice for a potential breakout move. So you can see they're trying. Our objective is up at 23. We'll see if they can finish the job, but right now just kind of waiting on this candle here to see what it wants to do, and then we'll kind of manage our stop from there. So we'll give the buyers a little bit more time here, see if they have it in them to get up to that 23. So we can see the buyers struggling a little bit here. You'll notice they weren't able to close above any of those swings. They did close above the range, so that is a good thing, but that failure to close above those swings make me a little bit nervous that we're probably going to find some sellers up here rather than seeing that breakout move. So I want to lock my stop in underneath that breakout candle right there. So my stop is going to go to 51.01. And pretty much at this point, I just kind of want them to finish the job, or I'm not super interested in staying in it anymore. And there we go. Nice little pop higher there, and we get the target filled. So that's kind of what we were looking for. Seeing this potential weakness coming in here, you don't really want to play around with that, so don't give the market a chance to take anything back. We're going to lock in. I'm not going to close because the bias is still good. We're still showing that upward momentum that we've been looking for, but just, be a little bit more conservative on the stop. Don't choke the trade out, but let the trade do its thing, and in this case, it held us in, gave us a beautiful run up, and got that final objective through that blow-off high. So perfect setup. It's exactly what we were looking for, and that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Go over to check out our trial at schooloftrade.com, and as always, we'll catch you next time.